And we are live. We are live, everybody. Trading live. I think this is actually quite fun to trade live. Got my tea. All right, I think that's good. Okay. All right. All right, let's get to it, guys. So this is another live stream. I don't like how... There we go. All right, that's better. All right. I think I fixed it. I think I fixed everything. All right. So basically, the markets are not opened as of yet. So what I'm going to do is I'm just going to look for... actually, right now, I am in a Bitcoin trade. Right? I'm long on Bitcoin. It's an intraday trade. I actually entered yesterday. So it's an intraday. All right. Oh, actually, I entered this morning. Actually, not yesterday. I actually don't remember when I entered. Let's see how that plays out, because it is almost at my stop loss right over here. All right. Right now, I'm currently on 3 trades. SUI, I'm down. Okay, so let's not even go to SUI. BTC. Okay. And QQQ. All right, so those are my 3 trades that I'm in. Now let's have a look and see what's going on with BTC. Let me just lower my Spotify. There we go. Okay, there we go. All right. What a day. Okay, guys. If you're joining now, which I cannot see because I don't have my YouTube screen open, but if anybody's there, then welcome. If you're joining at a later time, welcome as well. So we're live trading today. All right, now, as I said before, I do have 2 positions open. Okay, I have a BTC long, which was supposed to be an intraday trade. And I have QQQ, which is a short position. Okay, so those are the two positions that I have open so far. So this is QQQ. I did enter QQQ over here, okay, at 610. Let me give you the exact price. I entered at 610.56. My stop loss is currently at 616. Okay, and let's see how that plays out. All right, it's been there for, I entered this trade last week, so it's been there for a while, but it's apparently doing what it's doing. All right, it broke, it had a market structure break. Okay, as you can see here, had a market structure break on QQQ. Let's go to the line chart. All right. Actually, I'm looking at the 3-minute. I would prefer to show you on the bigger time frame. Let's go to the 1 hour on QQQ. All right. Here we go. And you know, I like my line charts so I can see the market structure breaks and so on much better. It's easier, less noise. Okay, so that's why I do use the line chart. All right. Okay, great. I think I entered somewhere around, so last week, somewhere around here. Okay. Basically, it had a market structure break, as you can see here. Price was trending up, up, up for a while. Okay. Then it consolidated for a little bit. Okay. From, let's say, from October last year to now, it's been consolidating. We had a market structure break, which means that in a trend, you trend up, 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 and in order for that trend to reverse and go the other direction, you must have a market structure break. So we had our market structure break here, and that was my trigger to start looking for an entry or a gap or an inverse fair value gap. All right. So what I did was I saw the market structure break. Then I waited, okay, until I could see an inverse fair value gap or gap, an inverse gap. Now, an inverse gap is simply you have a gap on one side, okay, and there's another gap on the other side in the opposite direction. So let's say you have a bearish gap on one side, you have a bullish gap on the other side, then that creates a bullish inverse fair value gap. In this case, I was looking for a bearish inverse fair value gap. Now, let's look here. I have one gap on this side here. Then I have a bearish gap on the opposite side, okay? And this is where I got my inverse fair value gap. All right, I should put that in a bearish gap. Okay, and that is where I entered. Now, as you can see here, okay, price did come back to retest, which is a normal thing. You break your market structure break, you get your confirmation inverse fair value gap. And usually what happens is that, of course, price will always come back to retest, okay? Nobody knows what price is going to do. Price is going to do what price is going to do. So, yeah, this position is still open. I could have obviously taken profits under here, but I think this, my target for this trade would be about 581. After 581, if price goes to 581, I'm gonna look how price reacts at 581. I can't predict. We're not in the prediction business. As a trader, we trade price, and price is all that we need to look at. All right, so I'm gonna look and see how price reacts at 580, and then if I see it bearish, if there are other geopolitical things that are happening, there's a lot of factors to that would play a role in whether or not price would either continue down or reverse or whatever. I don't even know if it's going to go to that price, but that is my goal. Okay, if it doesn't go here, if it doesn't go to 580, 581, then obviously it's pivot time. Okay, you must be able to adapt and change as fast as price. Nobody knows what the market is going to do, and yeah, and it would be you'd be, you know, basically I would be lying to myself if I would say, yeah, okay, I know price is going to go here for sure, and then reverse and do this and do that and the other. Okay. Yeah, we can speculate and we can, you know, trade on probabilities, but we can't really do anything other than that. All right. So as you can see here, my trade is still in profit. Okay. Let's see where price is going to go. So long as price remains below, I would say 620. Okay. So long as price remains below and does not break out of the let's say 620, okay, area on QQQ, I'm going to stay in my position. All right, I'm going to stay in my position. I do have my stop loss in, so I'm good. I'm not going to move my stop loss in profit because I would like to see this, I'd like to see how it plays out actually. I don't think I'm right. I don't think, that I know everything, but I would like to see how it plays out, and I'm willing to lose the risk that I'm taking on this trade. Again, I do trade very small quantities, risk. Okay, so my risk on this trade is $10. I don't trade big sizes, and that is for the simple reason of learning, okay, and scaling up gradually and becoming profitable over a long period of time, in order to learn the ins and outs of trading and risk management, and just a lot of different things that we need to learn about the markets actually. So instead of learning the expensive way and blowing up my account, and I'm not going to say wasting money, but instead of basically using more money than for learning, I prefer to do it cheap, and then when I've gained the confidence and master the confidence that I need, then gradually I'm going to scale up. And of course, if you didn't know, I'm a purple belt in the Real World Trading Campus. Okay, that is run by Professor Michael G. So everything that I learned, basically, I try to just stick with that mentorship for the last year and a half. So everything that I've learned, more or less, comes from there. Okay, yeah. Just thought I'd say that. And I also use BitMEX for my trading. So there is a sign-up bonus of $25 if you guys want to check that out. All right. You got to sign up with my link and send me your UID. All right. You deposit 25 and I'll send you 50. That is a special from BitMEX. Okay. And also BitMEX, they do also trade, okay, stocks. If you go on to trade, right, you can go into the equity perps. And here is where I open my QQQ position, up to 20x. SPY, you can also trade SPY there. All right. There's a lot of things going on here. Okay, so BTC, it looks like it's reversing. Good. Okay, now let's go have a look. And QQQ, I'm not going to really do anything. I've entered. I'm good. There is a bearish inverse fair value gap here. So that so far, it almost got filled up, but not quite. Okay, not entirely. So yeah, my trade is still valid there, I think. And this one here. This is another market breakup structure, as you can see here. So easy to see on the line chart, right? So this here is another market breakup structure. I like to mark it out. All right. You can actually just go across the chart. Now this, you can say it's a market breakup structure, but this is a false market breakup structure. Why? Because price broke out, but it didn't make it all the way up. All right. So I would consider that a false market breakup structure. What I would like to see, okay, is that it breaks here for more downward momentum. Okay. Let's have a look and see if that. All right. Now, if price decides to reverse, then I would look for a bullish, okay, market breakup structure, all right, which is up here. Obviously, in the line charts, you don't see the candle wicks, okay? See, you don't see the candle wicks. You only see the body of the candles, but it does, you know, remove a lot of the noise that we tend to see on the candle chart. So I do like to switch between both. It's there. Why not use it, right? All right. Okay, let's go see what's happening to Bitcoin before we have 15 minutes to open. All right, let's see what's happening to Bitcoin. Now, I also use the, if you're wondering why my chart is, why my candles are colored, is because I use the VRA candles, all right? Okay. So basically the PVSRA candles. All right. And basically what that does is it tells you if there is abnormal volume, okay, as per last candles. So here you would see abnormal volume. This is the green candles, okay? It's not your regular green candles. This would be a green candle signifying that there is an increase. There's a 200% increase in volume, okay, to the upside. Okay, so that's why it's kind of like an impulse candle, impulse volume candle. The red candle is not your usual red candle. It is 200 decrease in volume to the downside. Okay, so but you have here, if you know, you have your white candle, which is your regular green candle, and then you have the gray candles, which is your which are the regular red candles. Okay. The magenta is 150% decrease in volume, and the blue is 150% increase in volume. All right, so that's what I use. I use the PVSRA, okay, and PVSRA is price volume support resistance analysis. All right, so it analyzes the previous candles to give you the volume in price. So we got some increase volume here. So as you can see here, price is going down, volume is increasing. Now price is, let's see what's going to happen here. All right. I don't really trade the volume here. I do use CoinAnk, all right, because I do a lot of, I look at a lot of, you know, the order flow and so on, okay, CVD spot, CVD perps, cumulative volume delta spot, and cumulative volume delta perps. Open interest, which will tell me if, you know, new participants are coming into the market or if they're leaving the market. All right, we can go on the 15-minute for that. Okay, I do use the large order, which is here. You can see some large orders happening on BTC. Now, I don't use one item as, you know, to enter a trade or not. There's a bunch of different things that I look at for added confluence. But the first thing that I look at is price and the market structure break with efficiencies. Okay, efficiencies are gaps. Now, I've been, you know, looking at these things for over a year, so I'm not saying I'm an expert, okay? I mean, I guess we can always, you know, continue learning. But yeah, I'm pretty, you know, I'm really happy with, you know, taking all these different elements, putting them together and making a decision of, you know, for an entry, using all these different aspects, right? Okay, let's just go and see what BTC is doing. All right. This is here. I'll just remove everything and see what's going on here. Okay, first let's have a look at price. So here you can see the LOD, low of the previous day, okay? And here you have the high of the previous day. I like to use my Asian range, okay? Because that gives me a good, feel for where liquidity would basically come to, or, where it will go. Keep in mind that today is also, there's another thing that today is Thursday. And from my back test, I've back tested many different, items that I trade. Items like, Asian high or London, high and low, low of the day, and so on. So I've used all those statistics in my back test. And one of the things that, I've back tested, and there is a 70% chance of it happening, is that the midweek reversal. Now, midweek reversal can happen on a Wednesday or on a Thursday. And what midweek reversal is that, let's say, for example, price starts bearish on a Monday or Tuesday, and it continues bearish for a day or two. What would happen is that there would be a reversal of that, okay? And now this is not 100% all the time, okay? We're talking probability, so the probability of it happening is higher, okay? 60-70% or so. On a Thursday, okay? So midweek reversal is usually on a Thursday. So as you can see here, Bitcoin, okay, has been on the downside since Sunday, okay? It's been, on a clear downtrend since Sunday. All right. Okay, let's. Okay. You have lower low, lower low, lower low, lower low. Okay, so it's a clear downtrend. Anyway, what happens is usually, you know, what it is it's really, observing price for so long, it's really something else, because I would, a lot of people would expect the price to come and take out the low of last week. But I would be surprised if it took out the low of yesterday, okay, which it is, it's taken it out. I would be surprised if price comes close to the low of last week and reverses and go gets, something else. So what I would expect here is to see, okay, a midweek reversal in play. Now, at what time that happens, I usually find reversals happen at whether it's at 8. So there are times actually that I've also back tested. So at 8 o'clock, there are reversals. At 10 o'clock, there are reversals. At 2 p.m., all of this New York time, there are reversals. So I would be watching price really carefully, for to see when the reversal on Bitcoin could possibly happen. And again, this is a reversal short term, okay? This is not saying that Bitcoin, is bullish all of a sudden. This is an intraday trade, or, a 1 or 2 day trade, nothing more, okay? Because even, if you look at the long term, the higher time frame, okay, for Bitcoin, all right, you'll see here that it's in a clear downtrend, all right. You'll see here that it had a market structure break here. All right. It also had another market structure break over here. All right. So I don't expect, it to go very high. However, what I do expect, is it going to happen? No, nothing. I mean, I expect it, but it doesn't have to happen. Is that it can possibly, okay, now, never mind my drawing, is retest the 50 EMA, which is the blue band here, blue line. All right. I would expect it to retest the 50 EMA. So maybe, all right, that could be something that we're in for today. Or not. Let's see. How is my position doing? All right, as you can see, my risk is $10. So right now I'm down 2, which is fine. All right. Now, if you're looking at here, it's because I was moving it to see if I could move my stop loss. As soon as I went into profit, which was up here, I didn't do that. And well, there we go again. All right. So let's have a look now on Coinank and see what we can find. I have a look at the liquidity heat map. All right, so these are walls or liquidity, right? Or you can call them walls. So they act like a defense for where price should not go. Sometimes they get rammed through. All right. Now here you can see there's a lot of large, big trades. Okay, so they're large orders, and then there are big trades. So this is a big trade. Okay, a big trade could be liquidation. It could be let's see, how much is that there? So that's 14.29 million. At 1438. Okay, so that was about like an hour ago. Yeah, that could be liquidation. There's a lot of big trades here, so that could be a lot of liquidations happening. All right. All right, I'm just gonna close them. Okay. Large trades, however, are trades that are on the order book. Okay, that are executed, was on the order book, and has been fulfilled here, fulfilled. Okay, so let's see what we have here. 309. Ooh. So what I like to see is, for example, I like to see when the orders are coming in, when the initial amount is a certain amount, and the orders that are getting filled is much more than the initial amount. So as you can see here, the initial amount here was 107 million, and the amount that got filled was 762.4% more than the initial amount. Okay. Initial amount. Okay, so this one was partial and canceled, so they cancel that one. Here we have a sell order. Okay, so 5.16, 99.9% filled, partial and canceled. Okay, now another thing I look at here, okay, these are okay, so Next thing I look at is the TPO, okay? And here is, you know, the tail color. So these are where basically imbalances happen, okay? There are little trades happening in there. A lot of times what would happen is that I don't want to jump all around the place because there's a lot of information to give here. And I don't really want to confuse you guys if you're watching after. But yeah, this is what I look at. All right, let's just see what price is doing. Okay, here's a profile, the TPO profile for today. Okay, yeah, I'll just leave the TPO profile so we can go over that. And the VWAP. Okay. I do want footprint. Okay, these lines here, okay, as you can see, they're stacked imbalances. So these are what we would call, on the regular chart, they would be called gaps, right? Here, you can see gaps everywhere. So here's a gap, 3 candles, and the candle in the middle, when you see a gap, that's a bearish gap, okay? I'll just use this drawing tool. Let's see here. That doesn't work. Let's just use the brush. Okay, so here. I don't like that color. Oh, there we go. Okay, so that's a gap, right? Here's another gap. You can find gaps everywhere. Okay, it's the space between the candle on top and the candle below. That's all it is, all right? You can find gaps everywhere. It's what ICT calls fair value gaps, okay? That's a gap. I mean, they're everywhere, right? I don't know who invented it. I don't really care. But they're everywhere, and it's been like that forever, right? It is true, though, that I had no idea about gaps until I heard ICT talking about it. All right, so I had no idea. Gaps are also inefficiencies, okay? So it's where price traded and moved away from really fast, leaving an inefficiency or a gap, okay? A lot of times when price respects that inefficiency, it will continue in the direction. If it disrespects the inefficiency, then it will reverse and, you know, continue up or down. All right. So let's say, for example, price disrespects here. This is what we're looking for right now. This is the 3-minute time frame, okay? Let's say price disrespects. What I'm looking for is for price to disrespect this inefficiency. Oh, yeah. Instead of going all the way down. But it looks like price wants to go down. Okay, let's see. Okay. Now these tails are also where there are inefficiencies in here. A lot of times what I use, okay, from CoinAnk is to see how price reacts at the tail end, okay, of a move. Now, how does price react at a tail end? One of the biggest, you know, tell signs that I use is to see if there is absorption in the delta, okay, in the absorption in price. So here, as you can see here, we have, okay, on the 50-minute time frame, we have negative delta, and the delta is basically, you know, the buys minus the sell will give you the top delta up here. So negative delta meaning that we had more sells than buys, okay? positive delta, meaning we had this more buys than sells. So here we have sell, sell, sell. Okay, price is going down. Now here is where I'm gonna have to look and see how price reacts. So, all right. Oh, there we go. So we have a huge sell here. Am I still in my position? Yep. All right, let's see what's gonna happen here. By the way, if you guys want to copy trade, I am a copy a leader, okay, on the BitMEX platform, on the copy trade section. I mean, it's nothing. I don't really give a lot of weight to that, right? My goal is to just really become a better trader long term, to fit my lifestyle also around my trading, right? So today I woke up, I worked my matrix job, I went to the gym, I did a little Turkish bath, which was great, came back home, had some fruits, having a tea, and sat down in front of my computer ready to trade. I think, you know, spending all day, I mean, I think we're trying to, we trade so that we can escape the matrix, we can have the freedom, I guess, freedom in life, freedom in, to do what we, what we want to do, what we, our heart's desires and stuff. But I mean, if we sit in front of the computer 12-15 hours a day, and in the beginning it is needed, because you do need to learn, right? You need to like make progress, and the only way to make progress is by actually sitting there and and learning, right? You need to like study. Can't become a doctor without studying. You can't become a trader without actually studying how it works. But in the long term, after you've spent some time doing that, you don't want to be a slave to the market, right? You want to fit that into your lifestyle. And so what I'm trying to do now is really fit that into my lifestyle, right? Okay, let's see what price is doing. Well, that was the New York Open, so look at that. Look at that volume on the New York Open. There's a lot of aggressive selling. Aggressive selling are market orders, okay? So when you place a market order, aka aggressive selling, right? When you place a limit order, you are passively buying or selling, depending on if you place a passive limit buy or a passive limit sell. All right, and that is right over here. For example, you can see on all the exchanges, actually, they have that. Let's say, for example, you want to place a limit order, then that makes you a passive, let's say you want to buy, that makes you a passive buyer. You want to place a limit sell order, that makes you a passive seller. You place a market buy order, makes you a aggressive buyer. A market sell order makes you an aggressive seller. Okay, it is so simple. Once you go over that over and over and over again. Okay, guys. Okay, I like my volume candle here. As you can see here, we do have 150 volume increase on the upside. So let's see if that's going to push through. All right. Okay, let's see QQQ, what's happening. Oh, there we go. Usually when we have a gap at the New York Open, I usually I don't trade a lot of stocks, so I'm not you know, I just apply what I know to crypto trading, right? But if there's a gap, most likely price will come and fill that gap before continuing in the in its direction. So it will do a little probably manipulation, fill that up, and then, you know, continue downwards. Probably. All right. BTC. So why do I have these candles? Because sometimes I just look, you know, I think looking at the red and green candles is fine. Like I don't have any like red candles don't bother me anymore, or green. I think I'm you know, I've looked at them long enough, so yeah. I just look at price now, so doesn't matter if I but in the beginning I didn't want to look at, you know, I didn't want to have my charts with green or red because that like gave you a psychological bias, right? So I didn't want to do that. Oh, there we go. Yay. Well, now it has to disrespect this fair value gap. All right. The body of the candle has to ram through here. All right. For now, we only have a wick. The wick is the, you know, if it, you know, if it rams through that, then I would expect this to be a market break of structure on the bullish side. MSB. If, okay, let's have a look and see. And if, okay, I'm already in a position. If I was not in a position, oh, look at that. I would go here. All right. Yeah, I would probably do that. And I would target, okay, my Asia high. Now, another thing to consider, okay, is that as you can see here, these are just my thought process, okay? So as you can see here, we have, okay, talking about Bitcoin now, high of the day, and we have low of the day, all right? It is highly unlikely, it is possible, but highly unlikely that price will go and take out the low of the day as well as the high of the day. It rarely, I mean, it doesn't really happen that often, okay? So if price took out the low of the day, then my target as an intraday trade, okay, is not going to be the high of the day, right? I'm not going to go get greedy and, you know, according to the data, the back-tested data, I know that it's not going to come and take out the high of the day. So I know, okay, most probably it will take out the Asian high liquidity, all right? It will, most probably it will take here. And so that's where my entry would be if I was not already in a position, okay, on BTC. All right, so now the Asian high on the 4-hour chart, okay, let's see, where is that? Now, if you look here, okay, people are like, oh, you know, Bitcoin is dead, everything is dead. There's still opportunities every day to long and short, okay? If you know what you're doing, if you've learned the process. And I'll tell you something, the bear market is the best time to learn, right? There's no excitement of, you know, missing out, FOMO, missing out, you know, on any kind of like crazy moves like we have in, you know, in a bull market. Things are quiet, so it is a great time to learn, right? Yeah. So here, if you look here, the opportunity on intraday trades, you can easily make, you know, easily make a system and, you know, trade it and so on. But as you can see here, the Asian high, which is over here, okay, is 67,300. Okay, now that would have been a, let's say, if a 5-hour, okay, or 4-hour, whatever. If you look here, 67,321, 67,321. The move is quite small on the bigger time frame, okay? 67,321. That's a very tiny move, right? But if you manage, to catch that little tiny move, that's a great thing. Let's see my position. Oh. Okay, go. Let's go. Let's go on to the 3-minute time frame. Okay, so what I would expect also, all right, and again, all of this is from experience, from backtest and so on. What I would expect is that the move that starts at 9:30, okay, so New York Open, I would expect that move to continue until at least 10:15, okay? It depends. If it's 10:30, it could be, I would expect that move to continue, all right? It's the thing is, catching the move at 9:30, all right? That's where that's a tricky part. Now, let's go back to our thing here, okay? Here we go. All right, now, as you can see here, okay, we had negative delta on the 15-minute time frame. Okay, we're looking at the CoinAnk on-chain data analytics. You had negative delta, negative, okay. Here, okay, price actually, even though we had more negative delta, price refuses to break down below. So we just have to check here and see what happens, okay. Also, I use the value area high, value area low. Okay, here you have the value area high. Here you have the value area low. And here you have the point of contact. It's really tiny on CoinAnk. They should make that a little brighter. But you can see it here actually. Oopsie. It's called a POC. I made mine black, but you can make yours whatever color. Oh, yeah, I should make it a different color. Here. I want everything to be, oh, there we go. Maybe that. I don't know, whatever color. Okay, so this here, and the POC, okay, the point of contact simply means, it's where price is most, traded. So for example, price was most traded at 66847. And what happens is that price, whether you've broken the value area high or low, okay, in a ranging or mean reversion market, price usually likes to come right back at the POC. All right. So I would be looking to take profit, okay, at the POC 66847. Oh, look at that. All right, as you can see here, price refused. There's a lot of negative delta. Price refused to drop below. Now we have green or positive delta, and there we go. Here we have initial imbalance. Okay, these two white lines. And again, this is on-chain analytics. You can help all of these different items to, you can use them for help with added confluence to your decisions. But the first thing you look at is price. Okay, your market structure and your price, your inefficiencies. I can see here there is a nice little gap right over here. Okay, now let's watch price respect that gap. Okay, this is on the 15-minute time frame. So what that means is that also sometimes, like if, for example, you want to get in and out of a trade, or you want a hard stop, okay, on a trade, when I spot an inefficiency, especially at 9:30 or 9:40, then I would put my stop loss right below that candle. So I have an inefficiency here. I'm already in a trade, so in a Bitcoin trade, so I'm not going to do another one, but I'd put like my long position. Let's say, for example, I entered, I don't know, here, whatever. Then if, I'd put it right here. Okay, and I also, okay, I also like the fact that we have a gap. Okay, so a bullish gap right here. Now a bullish inversion fair value gap, because right across here you can see a bearish gap. So a bearish gap here, rammed through by a bullish gap gives me an inversion bullish fair value gap. Now let's look at the 15-minute time frame so I can show you what I'm talking about right here. All right, there we go. So not only exactly my system, not only did I have, okay, an MSB, we're on a 15-minute time frame, so it's okay, not only did I have an MSB here, okay, but I also had an inversion fair value gap, a bullish inversion, okay, fair value gap right here, okay. So everything aligned, okay? And also, okay, in addition to that, I had price absorption. So price, though the delta was negative, price refused to go lower, okay? And in addition to that, I also had, okay, these inefficiencies down here that price respected. So I had inefficiencies, a market break of structure, an inversion, bullish fair value gap or gap, and also what I've noticed, okay, this one doesn't, hold on guys, what I've noticed is that price usually likes, okay, to go fill in these inefficiencies, these little gaps. All right, so here we have the initial imbalance, okay, so price will fill that initial imbalance. I don't know. Will it touch the VWAP and reverse? I don't know. We'll have to monitor how price reacts at each level. Okay. Will price break the value area low? Okay. Go to the point of contact, come back and retest the value area low, and then go up, or come back and retest the value area low and then, drop back down. Okay. Retrace. Would it rally or will it retrace? All right, this is the value area high. Will it come and test up here? Will it go and take out all of these inefficiencies up here? Right? Would it just would it shoot to the moon? I don't know. Okay, we're gonna see. Let's have a look and see what price will do. Okay, now we can add a few other things in here. Now I know this looks busy, okay, it does, but if you stare at these things long enough and try to understand, okay, and teach, try to learn, I'm not talking about looking at 101 different YouTube videos, just really trying to understand how price works. Maybe, trading cheap, maybe using $1 or $2 of risk so that you can learn instead of going, $50 of risk or $100 of risk where you lose, right? Because when you learn, you must lose. It's just the name of the game, right? You can't win when you're learning. You gotta lose. And you gotta become a perfect loser. You gotta become, when you lose, you're gonna be like, oh, okay, well, I lost a trade today. Okay, well, tomorrow's another day, right? So long as you manage your risk, don't put everything in one trade, then yeah, it's just the way it goes. Good. BTC is doing well. Look at that. All right, guys, I really do expect it to break here. Another thing I use, okay, and I'm going to use it here on nice. For that one. Another thing I use, we're going to talk about the okay, look at that on the 1 hour time frame. All right, so yeah, here it is, the market breakup structure. Everything just lines up, right? Market breakup structure, that's where it will happen. Yeah. I don't expect it, but could happen. Anyway, so another thing that I use, okay, and you can use this in TradingView. You don't need on-chain analytics for it, or you can use it on BitMEX actually as well. Okay, is an indicator. All right, here we go. This is the indicator. It's the fixed range volume profile. And this follows the auction theory, which is something that I'm very interested and very happy to learn. All right, so I can mark off a range. I'm going to go on the 50-minute time frame for that one. All right, and I can mark off a range. So from the high, so let's say from the low of here to the high of here. All right, and basically what this tells me is where the value area high is. Okay, so this is where the value area high is where price is, you know, price is too high. So there's less traded, you know, participants don't really want to participate over the value area high. So this, you know, this becomes expensive. All right. And you have the value area low, which is the cheap, okay, cheap price or discount. So, okay, so let's, you know, you can use premium, the word premium. You can use the word expensive for over value area high. You can use discount, or you can use cheap for under value area low. Okay. So you have VAL and VAH. Okay. And then here, this pink line, I colored mine pink. You know, you can color yours whatever color. Okay, is your point of control. Okay, point of control is basically where there is fair value. What is fair value? Fair value is the price participants are willing to pay. Okay, so this is where, and it's also obviously if they're willing to pay, then they're going to trade in this area for a long time, right? If you're you know, if you're buying something and you know you have a lot of buyers at at a particular price, you know, yeah, it's just where, I don't know. It's just where participants are willing to trade. It's your point of okay, here you have your point of all right, your point of control, and this is where participants are basically saying that is a fair value. So your POC is basically the fair value. Above the VAL, it's expensive. Below the VAL, above the VAH, it's expensive. Below the VAL, it is at a discount or it is cheap. Okay. Now, as you can see here, a lot of times this is another strategy, but it's just added confluence to what I do. A lot of times, you know, you can look for additional entries, or you can look for entries when price goes below or above the value area. Okay, so if it goes below the value area low, then I would go over to CoinAnk. I would check and see what price is doing. Is it being absorbed? Do I see, you know, is the delta, you know, positive? Or if there's negative delta, is price able to, you know, fall further? Okay, or is it you know, is it rallying? All right. So those are really good indicators as well. Large orders, well, you can see here we got some large orders. I look at large orders as well. Okay, a lot of times you'll see a large orders are being placed. Price will continue down further. Okay, in this case it's a buy. Continue down further, and then, you know, then you'll see people or participants adding other large orders. Okay, so here value area low, value area high, your point of control. So a good trade here would be, for example, as you can see here, I have the indicator Lux Algo inversion fair value gap. You can use that, or you don't have to. Matter of fact, I'll remove mine. As you can see here, there is an inversion. This is the 15-minute. Okay, we have the inversion fair value gap, bullish inversion fair value gap here. All right, it's tiny, but it's there. Okay, there we go. And also you can see here, okay, price went to the discount range. Okay, so that's a great way to, you know, that's a great entry if you wanted to get in. My target, if I was, anyway, my target for today, between today and tomorrow, would probably be at the point of control, okay, which is the fair value price of Bitcoin. All right, in the range that I marked out. Okay, so you need to mark out the range. The range that you mark out can be the Asian range. It can be the low, high, and low of the previous day, high and low of the week, depending on what kind of strategy you're using to trade. Right, whether it's a swing or scalping or whatnot. These things, you know, it's just what I use. But obviously, if you would like to learn more about them, um, definitely put a comment, you know, in the comment section or send me a chat or whatever. And yeah, maybe I can do some lessons on it. But this is how I trade, and you're gonna probably be watching this most of the times. Look at that. Here's a great example. Okay, as you can see, let's go down to the 5-minute time frame. Okay, now as you can see here, what do we have here? Okay. Oh, look at that. Look at these huge orders, and price refused, okay, to go lower. Okay, the delta was very negative, 804. Look at the small amount of positive delta we had, okay, and price did not go lower. That tells me that there is a passive buyer, okay, in the market. Okay, there's a passive buyer that wants price to go up. All right, that's all it means. And again, passive buyer are limit orders, or, you know, buyers behind the scenes. There's no okay, so here it's reacting to the VWAP. Let's see, what is it doing to the VWAP? Okay, so it touched the VWAP. Now is it going to reverse on me? It's 10. All right. Okay, QQQ. Let's see here. QQQ. Oh. Okay, good. I got a new bearish gap. All right, I got a new inversion. Oops, that's not a 4. It's a bearish gap. There's an inefficiency, so yeah. Now, some people like to use the wick for, you know, to mark out your market structure break or market breakup structure. Some people like to use the body of the candle. My mentor in the real world, you know, would always say backtested. But I learned using the wicks. No, excuse me. I learned using the body of the candle. But I do actually, from it, you know, from trading, I do like to use the wicks, right? I may have to wait longer to get confirmation, but I like to use the wicks. All right, so let's see what QQQ. I'll do here. Oh, nice. Guys, you need to copy trade me on BitMEX, okay? I am a leader. All right. Let's see here. What else do we need to? Now let's have a look at order book profile. Oh, you know what we didn't look at? We didn't look at the CVD, which is fine, you know. Okay, so, but CVD will tell you, you know, if price is going up or down. So spot CVD, because this is where the real value, okay, this is actually Bitcoins being bought and sold. Perp is, you know, contract based, so it's not real Bitcoin, right? Open interest is whether positions are opening or closing, as you can see here. Positions are opening, so I guess longs are opening because price is going up. All right, and let's just go to a 15-minute where we can see it better. Okay, so all right, well, let's have a look. I might close my all right, so from here, 9:30. All right, so we got up. Okay, there we go. All right, so we have open interest going up. Okay, positions being opened. CVD perps, okay, going up. And CVD spot let's have a look at 9:30. I don't want more than 9:30 actually. Right, 9:30. Well, that is kind of flat. That is not okay, CVD, okay, cumulative volume delta spot is flat. CVD perps is going up. Okay, now I have a cheat sheet for this because I don't remember every single thing. Where is my cheat sheet? Let me see. Oh, my tea. Okay. So I have a cheat sheet, but I can't find it. But basically what we're looking at is CVD spot is flat, okay? Now we're talking about from New York Open, okay? So 9:30, okay? Here. So CVD spot basically flat. Price is, okay, so first of all, price going up, CVD spot flat, CVD perps going up, open interest going up. So open interest positions are being opened. And the small rally here is being led, okay, by leverage, which is equivalent to CVD perps, okay? So spot is, which is basically the real, it's real Bitcoin buying. It's flat for now. So what that means is that the move is a fragile move, but we know that it's been, you know, consolidating or mean reverting for days now. Yeah, that's oh. Let's see the reaction to the 12 and 21 bands. All right, so we know the rally is leverage led. That's all right. All right, what else can we look at? Let's look at the order book profile. Big trades. I know it gets busy here. I mean, the wrong way to use big trades would be, you know, you see a big trade, for example, a big short, you know, these big bubbles. You see some of these big bubbles here and you think, wow, there's a lot of, you know, shorts there. And so you enter a short. That would be the wrong way, right? You'd have to look at context before. And also, you know, it could be that those big trades could be, what do you call it? Like, you know, liquidations, right? It could be, you know, big trades being executed or stop losses getting hit. And that's a trade, right? Everything is a trade. So be careful what you do. Be careful how you use different, you know, different on-chain analytics. And also, there is no one thing that will give you, you know, the key to price, the key to how things will move. That will come with experience, I guess. Look at all that selling, and price is not going down. I mean, for now, right? I want to get rid of this. Okay, no. Large orders, big trades. Oh, right, okay. Now let's have a look at the liquidation maps, heat map, and liquidation levels. Okay, so here, this, as if you were not confused enough. Okay, so here we have liquidation levels. All right. Now, the red is the high, okay, liquidation levels. I wouldn't be surprised if this would come back here. Oh, look at that. It's gonna... Oh, look at that nice respect. Okay. Oh, look at that. So if, okay, if there is, okay, for this bullish inversion gap, okay, to be invalid, this candle, okay, or price would need to not wick through it, wicking through, okay, the gap is, makes it still, you know, a valid gap. If it disrespects it, it would need to like cover, you know, the full body has to close inside the gap. All right, like a body of a candle like that. For now, oh man. All right, so let's oops. Oh, there we go. So that's yeah. Damn. Okay. I mean, could we go right here and retest? Look at all that absorption, okay? Price is not retracing, even though delta is quite negative. Again, this is a 15-minute time frame. All right, so tells me that this inefficiency here might you know, be left untouched. All right, I'm gonna be right back. Okay, let me. Oh. Right, got my little hoodie on. Oh. All right, guys. I like how prices. I don't know if buyers are going to get tired of defending this price level here. Oops. Spotify is too loud. All right, good. Yeah. I mean, are they going to get tired of defending that area? This is a great example of absorption when we talk about footprint. All right. As you can see here, we are under the value area low, and price refuses to retrace further. It's being absorbed. The cells, okay, all the big cells, okay, are being absorbed by buys. Now, by now, we should have a reversal. So if it's continuing like that, it means that probably is like, I mean, I guess this is the area where you don't want to like be in, because, you know, this is the fight between the buys and the sells and, you know, the big guys. So, yeah. Anyway. Let's have a look at something. Now, so these are my fibs. My fibs are the values are a tiny bit different. Usually, all right, it will come back and test the 0.75 before heading up. All right, all right, all right. I know where it's coming. Okay. 65,877. 65,877. 65,877 right here. Okay, good. So this is what we're looking at. We're looking for it to 65,8. Let's see here. Huh. Let's see. If you guys are not journaling, I want to journal. Write your trades down. Then, you know, feed it to ChatGPT and ask ChatGPT to like put it in a, you know, an Excel spreadsheet. We'll just watch price here, guys. Having some yummy grapes. Oops. That's the 0.75 area. I won't be surprised if it comes right back here. It broke out of the LOD, all right? It retraced, okay, broke below LOD. Okay, rallied up. Now I expect it to come back for a retest of the LOD. Retest of the LOD would be on my 0.75 on the Fibonacci retracement tool. All right. My numbers are a little different. There are lots of lessons on that too. My mentor from the real world, yeah, he's the one that taught us about these things. Yeah. Huh. I mean, the amount of things you can do while you wait for price. I don't like trend lines, but sometimes it just, it's so obvious that I draw it. right, guys. I think that's it. I'm gonna post my whether it's a win or loss on Bitcoin. I'll post that. Oh, look at that. It's respecting here. Respecting that imbalance right here. Or is it? Ooh. $65, that's the huge wall. That's the huge wall that's being defended. I don't know, this looks like it wants to push up. Oh, I'm hungry. Hungry. Ooh, look at that. That should be a nice volume candle here. That's what this. Well, this is no longer valid. I mean, there's a lot of moving parts when you're trading, but you know, if you're trading to make money, it shouldn't be easy, right? Trading is not easy. But if you stare and if you use things for a long time, if you study it, if you backtest it, then it makes sense, actually. There's a lot of things, that I do. I go back and forth, but I understand it. I know what I'm doing. Of course, I'm still learning, but I know what I'm doing. I'm very comfortable at looking at price now and understanding, you know, for example, when it comes to on-chain analytics, I understand what I'm looking at. When it comes to looking at, you know, this volume profile, I understand what I'm looking at, right? It just makes more sense instead of trying to, let's say, for example, guess where and what price is going to do, right? Let's say you stare at you're looking at a chart like this with just candles. You know, I don't use RSI, or, I mean, it's not that I'm against it or anything, and I just don't use it. They're lagging indicators, you know. Price comes first, and then the RSI will give you a value. Price comes first, and then the you know, the EMAs will give you a value. So I don't I use it as extra confluence, but not RSI. I don't use it. Not my, never have, not, you know, don't have a strategy for it. And of course, you know, people can say, well, you know, you could have done this, that, and the other. In hindsight, everything is easy, but yeah, pretty, everybody has a different system, you know. And another thing is that I don't think one system is better than the other. I think it's, you know, being consistent with your system, being disciplined in executing, you know, your entries and so on. That is what makes the, you know, the whole difference. I also don't think that people that sell you their own system, right? Like, I'm not gonna name names, but I had a 3-hit to the high system, you know, that I bought. I was there for like, I don't know, 8 months or something. And it's just hard learning somebody else, you know, someone else's system. Whereas now you know, what I did was, in the real world, I created my own, right? I was guided on how to create my own system, how to backtest my system, how to take it live, how to, you know, decide, calculate the expected value, right? So you want positive EV for your system. And now I'm, you feel kind of empowered. Actually, I do feel empowered because it's not a mystery anymore. I'm not trying to buy a course from anybody because I know, you know, how it's done. I know how to create a system. I know how to backtest it. I know how to see if it's, you know, it's going to be profitable or not. Those are the foundation, actually, of things that, you know, if you want to be a trader, those are the foundation of things that you should, you know, you should be learning. Or if you're in a, you know, you have a mentor, or, you know, a school or whatever that you learn trading from, they should be teaching you. Those are the foundation of trading. It's not to, you know, the foundation is not, here, come buy my system, it works, I have a, you know, 99.9% win rate, buy that, and, you know, give it 6 months, 8 months, and you're going to become profitable. You're just eating the fish. You're not learning how to fish, right? Learn how to fish. It's probably going to be the best thing that you ever did. Oh, look at us. We're going. Hey, it's going. I mean, this was absorption. Look at that. I mean, look how price. Oh, look at that. Look at that. Now you know what's going to happen. I mean, so I don't know what's going to happen, but I've seen it so many times that I figure this is what's going to happen. All right. What's going to happen is that price is going to eat through all of these here, all of these imbalances. And, okay. Now these are liquidation levels here. Let me lower my Spotify. Okay. Now these are liquidation levels all over here. Okay. Now instead, okay, its price is going to go for the easy hanging fruit. Okay, good. All right, as you can see here, there's a huge wall, okay, under here. Price was unable to break through there or break under here, okay, because there's a lot of walls here, tiny ones, but big ones too. So what price is going to try to do now is price is going to try to come up here, is what I think. Is these are the lowest level liquidations, but there's a lot. So what happens is that price will go, usually I see it many times, price will go to these areas up here, so that participants will have to add margin to their positions. They'll have to add so that they can move their stop loss or their liquidation price further and further away. That is, actually, I heard that from Tino, Trader Reality. I love watching his stuff, actually. His macro streams. And he actually uses CoinAnk as well. And so he had mentioned that one day, and it just clicked. It made sense. And of course I observe it and I looked at it and see if price was really doing, and a lot of times it would do that. Now, obviously I don't base any entries on that, or, but I just look at it and I find it interesting that, I guess imagine if it goes up here. 69. That's a big one. It's a big wall right here. So anyway, I'm gonna leave it here. Okay. I'm gonna go eat. Guys, thank you for watching. And if you're joining later, I actually would like to schedule this on a regular basis. So once every 2 weeks, so twice a month. I think Thursdays or Fridays. I'm yet to decide. Fridays, the weather is changing, spring is in the air, or at least, beginning to come. So, when the weather is nice, I do like to go on a Fridays, just take it easy, relax, hang out with my friends, things like that, for lunch and whatnot. Enjoy life really on a Friday. So live streaming after going out for lunch and having, a few drinks is not, actually I don't trade. I won't trade after that, but I'll have to decide what day is most appropriate, whether it's Wednesday, Thursday, Friday. I like Thursdays because I like the midweek reversal kind of thing. That's actually very cool, but any day is a day for an opportunity in the market. So could be any day. If you haven't done so already, hit subscribe. I guess click the notification bell, and so if I schedule any lives, or if I just go live on a whim like that, you'll get notified. All right, so that is it for me. I'm going to sign off. Thank you for watching, and see you in the next live. Don't forget, BitMEX sign up bonus is $50 when you deposit 25. All right, link in the description. Thank you for watching, guys. Bye bye. Have a great weekend.